I think we're in an acceleration phase now in silver. In other words, the bull trend has been going on since the lows in 2015 for gold, gold miners, and silver. Silver and the miners have been somewhat irregular participants. We've accelerated the market. And I think what's about to happen over the next 5 or so months is likely to be the kind of strength that people aren't used to. And therefore, they'll probably doubt it, all the way up, like, oh, this can't be. I think we're headed into a period of ascent for silver that is far more demonstrable, far stronger than gold on a percent gain basis. Same is true with the gold and the silver miners. They have now, when we measure their spread relation to gold, or we measure silver's spread relation to gold.
Silver has been showcasing remarkable strength in recent months as it entered its acceleration phase. While silver and miners had been lagging or inconsistent, they're now showing strong upward momentum. Over the next 5 months, silver is expected to outperform gold in percentage gains. Technical breakouts in silver and mining stocks relative to gold confirm this shift, signaling a powerful rally ahead, one that may surprise many investors. Based on the 1972 analog, which shows a remarkable correlation with current market conditions, silver might reach the psychologically important $50 level by January and February 2026. With decades of experience in studying long-term trends in commodities, equities, and currencies, Michael Oliver explains that market analysis shows that silver typically outperforms during the later stages of precious metals bull markets, often delivering percentage gains that exceed those of gold. Recently, silver has broken through this resistance line, indicating a shift from a steady rise to a sharper ascent. Silver is entering a powerful phase of acceleration, with analysts predicting it could hit $60 to $70 within 5 months. This isn't just a temporary rally. Some believe it signals a broader shift, where gold and silver may once again be treated as real money. The gold-silver ratio analysis, a key metric for precious metals investors, appears poised to move to more favorable levels for silver. Historical precedent suggests that after gold makes a sustained breakout to new highs, silver often follows with more dramatic price appreciation. Analysts believe gold is entering a much steeper ascent than seen in the last decade, with gains expected to be faster and pullbacks shorter and less severe. Current silver market patterns are following historical precedents from previous bull markets, with the 1972 analog showing a robust correlation to today's price action. When examining average performance after gold breakouts, historical data points to the potential for silver to exceed $50 per ounce. Historical cup and handle patterns have frequently preceded major silver rallies, and similar formations are currently developing. Additionally, time-based corrections, where the price moves sideways rather than declines sharply, have often preceded significant upward moves in silver. Jordan points out, the 1972 analog shows a robust correlation to the current market. Silver could reach $50, then consolidate before the next leg higher. As we dive into the video, remember to subscribe and tap the bell icon so you never miss an update. We value your thoughts, so drop a comment below and give us a thumbs up if you enjoyed the content.
Gold dropped from over 2,000 and dropped down to the low 1,600s. It's a 20% correction, actually, for the only one it had in the whole bull trend. And silver had a nasty pullback. It got down into the $17 level, I think. Plot that weekly price chart, and when you punch it up, draw a line across the highs of the last several years, so 2022, 23, 24, and into this year. And you'll find you can connect a whole bunch of peak weekly price closes. And there's an uptrending line across those highs, meaning it defines the ascent of silver. And it's hit that line 1, 2, 3, 4, 5 times over the last several years, where it hits that line of ascent and bumps its head, and then you get a pullback. Nevertheless, it continues up. That line of ascent pretty much defines what's going on in silver. It's going up every year. Okay. Yeah, there are pullbacks, there's pauses, et cetera, et cetera. Well, our momentum work in early June, so 5 weeks ago, let's say, told us we're going to accelerate now. In other words, we're not going to follow some prior line of ascent that everybody's used to. Price just joined in last week. And if you plot that line, you'll see that last week's action punched through it. In other words, if that line was a ceiling, an ascending ceiling of resistance, even price now says, I'm out of here. Okay. You blew through it definitively. And and pullback this week isn't even threatening that. In other words, we've accelerated the market. And I think what's about to happen over the next 5 or so months is likely to be the kind of strength that people aren't used to. And therefore they'll probably doubt it, all the way up, like, oh, this can't be. I think we're headed into a period of ascent for silver that is far more demonstrable, far stronger than gold on a percent gain basis. Same is true with the gold and the silver miners. They have now, when we measure their spread relation to gold, or we measure silver spread relation to gold, we're getting breakouts saying, hey, we were sleepy for a while. Now we're going to beat you, Mama Gold. And I think you should put your seatbelt on, because I think the next 5 months or so will be people doubt that because they're so accustomed to what they've been taught by silver itself. Its behavior pattern it's been embedded in investors' minds. Well, this happens to many markets, whether they're in a bear trend or a bull trend. They may suddenly at some point in the trend say, hey, enough of this. I'm going to move more quickly, whether up or down, in this case up. And I think we're going to be probably in the $60 to $70 zone in the next 5 months or so. Okay. Now, and that's not the end of it. I don't think we're going to end the bull market in gold and silver like we have in prior peaks, like in 1980 or 2011. I don't think that's what's coming. I think what's coming is so many institutions, assumptions, and markets will be turned asunder. We're going to end up with monetary metals being money yet again. And I think it's going to pop up here, 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 this country, that country. And already in the United States, there have been several states that have not just not taxed gold and silver transactions, but have made them legal tender. Florida has done it. Texas has just done it, where they're in effect telling the central bank of the government, you don't have monopoly control over money anymore. We just legalize gold and silver as legal tender. You could pay your taxes with it. So in other words, they're in effect seceding from the national monopoly control over the money unit, which is, of course, an unbacked piece of paper. They're replacing it with, that kind of process is underway in its infancy, and it's going to grow more rapidly, especially as we see an economic downturn, which I think we're going to see, and the stock market trap people. I think it's been topping actually for a couple of years, where it'll make a gain, have a sharp pullback, and make another gain, but it isn't sustained, and another drop, et cetera. I think there's distribution going on, and I think the market is topping. And when it tops and goes down, that's when you see the data points go awry, to the point where the central bank pulls their hair out and the central government does the same, and they have to go to monetary excess, which we know our current president is all in favor of. He's told them, get rates down to 1%, whatever. That is going to further pave, which has been a layered process. I think it's going to be far more vertical, which is going to surprise them. And yeah, there will be pullbacks, but they'll be sharp and over with quickly, and they won't be as deep as some of the other pullbacks we've seen. That's what I think is about to unfold. And his question again was the
Where are your
sell points. Oh
specifically?
yeah, I about chuckled. Pardon me. When we look at long-term momentum, such things as a 3-year average oscillator, where we oscillate the price of gold versus its 3-year average, or versus its 3-quarter average, long-term yardsticks. We're not even near any numbers that would say, oh, it's over. On short-term basis, you could always get sell signals here and there, but they're like, You get out at every sell signal, you're unlikely to get back in time. In other words, yeah, it's a trader's thing. You might drop for 2, 3 weeks, but if you don't get back in 2 days later, it's back at the highs. You know what I mean? We've seen this repeatedly. We're not near any long-term momentum structural breakage points. Now, when we go back and look at peaks and troughs and go major lows and major highs in gold through history, going back to 50 years that it's been legalized, when it makes a high and turns down, it breaks structure very, very soon after making the high. Example, MSA turned major bearish on gold in January of 2012. It was only 3 months after the high. And when you made your high in September, October 2012, 11, and you dropped some, didn't do anything on a price chart, but for annual momentum of gold, it said, uh-oh, you just broke the backbone going back quite a few years on the momentum chart. So we turned major bearish, and we had to put up with a lot of complaints because most of the public wasn't willing to go bearish then. And we said, no, be gone. Well, sure enough, gold labored. After it made its high at 1920, it dropped down into the high 1500s at some point, and then lived between that level and the upper 1700s for the next year. Kept trying to go back to its high, but couldn't. So it wasn't sideways action. It was sideways action after a peak. But it had broken already 3 months off the high its annual momentum trend. Same in 2015 when it made its low in December of 2015 at a price of 1,050. 2.5 months after that low, actually a month and a half after that low, in mid-February 2016, MSA went long-term bullish again because we had broken annual momentum trend structure to the upside. Right now, we're not even near any breakage levels. And when gold makes a high or a low, what happens is the momentum structures move up to where they're very nearby the action so that when it breaks even modestly, it's got something to break of significance. We don't have that now. I'm not fearful of a top in gold.
Michael argues that silver's previous highs of $50 in 1980 and 2011 were fleeting spikes that don't represent real resistance today, especially when adjusted for decades of dollar devaluation. If silver were to match its historical value in today's terms, it could reach $200. Most investors still hold minimal exposure to gold and silver despite their strong performance relative to equities since 2015. This disconnect may soon shift as public awareness catches up and economic conditions worsen. The current stock market highs are viewed as deceptive bull traps, similar to past cycles in 2000 and 2007, where marginal new highs preceded significant declines. With the Federal Reserve likely nearing rate cuts amid weakening data and falling bond and dollar performance, analysts warn that such cuts could mark a major top for stocks, leaving gold and silver as the only markets showing true strength. Once silver surpasses the $50 mark, broader investor awareness is expected to surge, as comparisons will be drawn to other commodities like copper and gold, which have already reached new highs. Within the metals complex, silver, zinc, and copper have been identified as three metals with the most substantial investment potential due to their essential roles in electrification trends. Silver's dual role as both industrial and monetary metal creates unique price dynamics compared to purely industrial metals. While all three benefit from technological demand growth, silver has the additional tailwind of investment demand. When compared to gold, silver remains undervalued based on historical ratios. Throughout history, the gold-silver ratio has averaged closer to 40-1, suggesting significant upside potential from current levels if the ratio returns toward historical norms. Michael Oliver also mentions that the stock market appears to be forming a significant top, showing signs similar to the peaks of 2000 and 2007, where momentum had already broken down well before prices began falling. Although new highs may deceive investors, they often signal a teaser before a sharp decline is to come. The market's resilience is masking underlying problems that could soon trigger a much larger financial reckoning. Now, let's get back to the interview.
Like on a weekly chart or something, they're almost phantom highs, meaning you're up there so briefly, it's like you were hardly even there. It was just thin air and it collapsed. Okay. And those old highs, when you value silver at that time, let's say 1980 at $50 or 2011, 14 years ago. What's happened to the dollar since then? I don't mean the dollar index, but the real buying power of the money unit. It's continued to collapse. So if we ever took silver to a real value where it was in 2011, when it was at $50 briefly, or 1980, and factored in the degradation in the money unit, silver would probably be $200 just to match its real value then. Okay. So I don't think there's any resistance right now between here and 50, and I don't think 50 is resistance. It's a phantom set of highs that are so old and so long ago that if anybody wants to try to sell against the $50 highs, I bet it doesn't work. And if it works for 2 days, it won't work any longer than that. I think we're going to blow that stuff out and get it far enough beyond it to where people have to then sit down and say, golly, I missed it. And right now, from everything I read, and I don't pay a lot of attention to this stuff, but the average investor's portfolio in gold, et cetera, is so trivial in the US particularly that it's laughing. I saw a Bank of America statement of positions of people in various asset categories, and gold was like off the page. It was like less than 1%. They still don't believe it. And yet it's been beating the stock market for not just a year or two, but really since the 2015 low. Gold is far above where it was then. And you can go back 3 years or 5 years, but they don't acknowledge it. It's not on CNBC. It's not on Fox Business News. Oh, yeah, recent strength has been, but they don't realize that it's been beating. And now silver, if you look at where it is in relation to the S&P, we ran charts on it a couple weeks ago. It's beating the pants off the S&P, but nobody's aware of that. Anyway, that's going to shift, and when the public finally realizes that, ooh, I missed it, or ooh, it's been doing well, and ooh, the stock market's not doing so well, because I think these new highs in the stock market are a bear trap, a bull trap, in which people think a new price high means something. Not always. Sometimes it's a teaser and a top. This is exactly, by the way, the price behavior of the stock market back in 2000. We got bearish in January, and the son of a gun went sideways for a whole year. In fact, made new highs after we said, be out of this market. There were marginal new highs. Well, in 2007, same story. It was laborious tops spanning much of that year. And we put out a sell signal, for example, on the S&P in January of this year, well before it really started down and showed downside starting in March, really. It's when you started to see the pain. And then April, of course, it puked. We're only marginally above those highs. So it's behaving just like it was at those two prior major tops. Laborious, teasing new highs that really don't go anywhere. And then finally, it just implodes. And by the way, there's one, if you want to look for a signpost, 2001, January 2001, you weren't very far off of what had been the high monthly close in the S&P in August of 2000. The Fed cut rates twice after a long period of pause. 2007, September, October, the Fed cut rates after a long period of pause. You could have put a signpost, a tombstone on the market when they cut rates and circled it, said when they cut rates, short it. We got CPI and wholesale prices coming up this week and also jobless claims. So it could be interesting because if any of those data points give the Fed an excuse to finally say, okay, we're going to cut rates. And we know there's already a bunch of Fed governors wanting to cut already. In fact, insisting we do it in July. All you need is about one or two more to say the same thing. And Powell's going to have to finally give in. I'm waiting for a rate cut. That would be the tombstone on the stock market. Anyway, I think events are starting to really get to a crescendo point here. Dollar index, which had been asleep for 2023 and 2024 in an 8% range, now suddenly has started downside fairly sharply. T-bond market, which is normally an alternative to the stock market, and a co-upside driver with gold as the stock market tops 2000, 2002, 2007 to 9. If you own T-bonds, you did pretty well. T-bonds are acting bad. And of course, that's very unnerving to the central bank and the central government. There's only one market that's behaving quite well.
Strong technical breakouts, advantageous historical analogs, and increased investor awareness of silver's undervaluation in comparison to gold are driving the metal toward a crucial and potentially explosive phase of its bull market. Silver is poised for significant increases, potentially reaching $60 to $70 within 5 months and possibly even higher in the long run. As economic uncertainty rises, stock markets display warning signs, and central banks consider policy changes. Silver's attractiveness as a monetary and industrial asset is expected to increase rapidly as the public recognizes its value and the broader financial system begins to acknowledge reality. For what reason is silver predicted to beat gold during the next 5 months? What does silver's current reflection of this historical trend mean? In what ways does the gold-to-silver ratio bolster the argument for silver's sustained ascent? We would love to hear your opinions, so please leave a comment below. Please remember to subscribe for more material and give this video a thumbs up if you found it helpful.